Dubro Suspicion Files.
Okay, let's unpack this. We are diving deep into a figure who is, well, maybe the single most important and definitely the most volatile influence in our modern industrial and digital world, Elon Musk.
Right.
And his relationship with cryptocurrency is not just financially consequential. It is the subject of intense global scrutiny. For anyone following the markets, it's frequently just baffling.
It really is. It feels like the definitive narrative battle of our generation. This struggle between pure creation on one hand and just total chaos on the other.
Exactly.
And our mission today is very specific. We're here to conduct a forensic examination of the evidence. We are not here to speculate based on, a few tweets.
Yeah.
We're here to answer the core question that's been consuming the digital world for years, and we're applying hard data to the myth.
So what is that central question?
Is Elon Musk the hidden architect of the digital financial age? The pseudonymous Satoshi Nakamoto, the sovereign founder? Or is he merely its most chaotic and, frankly, self-serving beneficiary, a kind of trickster figure engaging in some really sophisticated state-of-the-art market manipulation?
And that dual hypothesis is what really defines this deep dive. We've pulled together a fascinating stack of evidence that goes way beyond typical financial reporting. We're synthesizing linguistic stylometry. Looking at writing quirks across decades, alongside analysis of the original Bitcoin source code architecture, minute-by-minute market data from the biggest Dogecoin surges, official SEC filings from Tesla, and even these new critical regulatory shifts happening right now in 2025, like the Genius Act.
We're moving past speculation and into forensic fact. You should think of this as a cold case investigation into two possible identities.
Okay.
One, a person who laid the technical foundation for a completely decentralized future. And two, the man who, decades later, became that system's most powerful centralizing force.
And we need to determine if the man who builds rockets and electric cars is fundamentally exploiting a world that someone else built, or if he's just, reclaiming a creation that was his all along.
That's the core of it.
Our mission is to see if he's the cipher or the sovereign actor. And we have to begin at the beginning with the most provocative theory: the search for Satoshi and the genesis of Bitcoin itself.
And this search for Satoshi Nakamoto, it's anything but a parlor game. The stakes could not possibly be higher. The identity of this individual, or maybe a group, it matters profoundly because they control the original, untouchable stockpile of Bitcoin.
Right, and just to put that in perspective for everyone, how large is that stockpile today?
We estimate that the various Satoshi wallets hold approximately 1.1 million Bitcoin.
1.1 million, which when we look at the valuations from, say, mid-2025, that translates to nearly what? $135 billion.
That's right, $135 billion. It's a staggering concentration of wealth just sitting there, dormant, waiting.
That one single holding represents a non-trivial risk to global financial security, right? Just because of the sheer centralization it embodies.
It's the ultimate paradox. The core promise of Bitcoin is decentralization, yet one anonymous actor controls over 5% of the total circulating supply. If Satoshi ever decided to move or dump that asset, the cascading fallout would be immense. It could destabilize smaller national economies.
And that's precisely why the possibility that this person is Elon Musk, a man with a history of, let's be honest, unpredictable market actions, is so compelling, and for traditional institutions, so terrifying.
Absolutely.
So the whole Musk is Satoshi theory, it really started to gain significant intellectual traction around 2017. It was largely championed by a guy named Sahil Gupta, a former SpaceX intern, and he laid out what we're calling the polymath syllogism. What was the core logic there?
Well, Gupta's argument was that creating Bitcoin wasn't just a coding problem. It was this incredibly rare convergence of three distinct, very high-level skill sets.
Okay, what were they?
To create Bitcoin, you needed, first, advanced economics. Specifically, a deep understanding of monetary theory and the failure modes of fractional reserve banking. Second, a master-level grasp of applied cryptography. How to secure transactions without a central authority.
Right.
And third, and this is critical, a high proficiency in C++ programming to actually write the initial robust client.
That is a very, very rare combination of skills. So how does that map onto Musk's early career?
It maps perfectly. It's almost uncanny. Musk had already written the foundational complex code for both Zip2 and, more importantly, X.com.
Which became PayPal.
Eventually, yes. And 𝐏𝐻𝐃𝐂𝐀𝐒𝐓, at its heart, was an attempt to solve digital trust and peer-to-peer payments. So he already possessed that rare triad. The economic insight from seeing PayPal's centralization issues firsthand, the C++ programming skill, and this autodidactic ability to just master completely new technical fields.
But it goes beyond just the skills he had, right? The evidence suggests his signature engineering philosophy is kind of baked into the original code itself.
Yes. That's where the analysis of the source code architecture becomes so compelling. The early Bitcoin code, version 0.1.0, is famously described as monolithic.
Okay, so monolithic. What does that actually mean for, someone who isn't a coder?
Right. It just means it compiled into one single self-contained executable file. It didn't rely on external software libraries or dependencies to run. It was a complete standalone system.
And why is that specific choice so significant in the context of Musk?
Because it perfectly mirrors his consistent engineering philosophy, especially from his time at X.com. Musk tends to favor these self-contained, almost brute force solutions.
Right. He wants to control everything.
He wants to control every variable and avoid the complexity and the fragility that modular design can introduce. It's what engineers often call dependency hell. The monolithic architecture suggests a highly centralized control philosophy, even in the creation of a decentralized system.
It implies the creator wanted to ship a final, complete, controlled product.
Exactly. It's more of a rapid deployment mindset, not an academic, collaborative, open-source approach you might expect.
We also noted that the initial code hinted at a much larger financial ecosystem. It wasn't just about peer-to-peer cash.
Not at all. And this is a fascinating detail. The source material reveals that the early Bitcoin code actually included features like a basic poker game and a functioning digital marketplace.
A poker game.
A poker game. These elements were later removed, but their existence suggests this grand, expansive vision and everything app centered on financial transactions, well beyond just currency.
Which aligns perfectly with his original plans for X.com.
It aligns remarkably well. I mean, X.com in the early 2000s was meant to handle everything from banking to investing. And of course, that's his contemporary overarching vision for X, formerly Twitter, today.
That conceptual continuity is really powerful. But here's the major counterargument, the one that requires some technical nuance. The immense cryptographic sophistication.
And this is the primary sticking point for a lot of technical experts. Bitcoin's creation involved the meticulous implementation of several non-standard cryptographic choices, like the specific use of the 𝐏𝐻𝐃𝐂𝐀𝐒𝐓 elliptic curve. The mathematical rigor required to select and implement that kind of thing suggests a creator who is deeply, deeply embedded in academic applied cryptography.
And Musk, publicly at least, is a physicist and an engineer, not a cryptographer.
Precisely. He understands mathematics, of course, but he has no public record of publishing peer-reviewed research in cryptographic journals, not like other high-probability candidates, like Nick Szabo.
So critics argue that the jump from writing C++ for, say, Zip2 to implementing state-of-the-art crypto protocols is just too big a leap.
It's too large to believe it was done by one person in their spare time, especially given what else was going on in his life at the time.
So how do the proponents of this theory, the Musk is Satoshi believers, how do they get over that intellectual gap?
They pivot directly to what you could call the autodidact defense. The counter-argument leans heavily on Musk's documented history of mastering entire complex fields just through first principles reasoning.
Right, like with SpaceX.
Exactly. He taught himself advanced orbital mechanics and complex materials engineering to start SpaceX. He effectively became a top-tier rocket scientist without a formal aerospace background.
So the argument is he could have done the same with crypto.
That's the argument. Proponents say that mastering the necessary applied cryptography for Bitcoin, which, while very complex, relies heavily on existing mathematical frameworks, would not be outside the cognitive range of a mind that's dedicated to breaking down systems into their fundamental parts. For him, cryptography might have just been another engineering problem to solve.
Okay, let's move to some of the circumstantial evidence, because this is also really compelling, specifically the geographic and philosophical alignments.
The geographic piece is incredibly intriguing, though again, you have to say it's circumstantial. An IP address leak from 2009 allegedly traced some of Satoshi's online activity to an area near Van Nuys, California.
And Van Nuys matters because?
It matters because it's immediately adjacent to the Van Nuys airport, which was, and still is, a frequent hub for Musk's private travel. And it's in the general vicinity of SpaceX's early operational centers in Hawthorne. It gives you a plausible, though not conclusive, physical proximity during that critical coding period.
And then there's the philosophy. The whole motivation for Bitcoin seems to be a perfect mirror for Musk's deepest grievances against centralized control.
This is maybe the strongest thematic link. Bitcoin's entire existence is predicated on a fundamental distrust of central banking and the state's ability to debase currency through inflation.
Which aligns perfectly with his experience after being kicked out of PayPal.
Yes, he watched the elegant digital vision of 𝐏𝐻𝐃𝐂𝐀𝐒𝐓 become constrained by these traditional centralized financial clearinghouses. He has frequently described the legacy banking system in these scathing technical terms, like being held together by heterogeneous database patches.
A technological nightmare.
A nightmare he felt a moral and technical obligation to solve. So the theory posits that after PayPal, he still had that intellectual itch to create a true peer-to-peer cash system, one that the regulators and banks he despised just couldn't control.
The philosophical trauma of PayPal then becomes the catalyst for Bitcoin.
Exactly. It presents a very clear and compelling narrative.
And here's where it gets really interesting. We're moving from the technical architecture to the linguistic fingerprint. We're diving into forensic stylometry, analyzing the roughly 80,000 words Satoshi left behind in emails, the white paper, and various forum posts.
And forensic stylometry provides some of the most suggestive and, frankly, difficult to dismiss evidence in this whole case. Satoshi's writing corpus exhibits a phenomenon that researchers have called linguistic schizophrenia.
Linguistic schizophrenia. What does that mean?
It's a persistent, strange mix of British English colloquialisms, spellings, and phrasing, but it's interspersed with clear, modern American technical terminology.
Which is baffling if you assume the creator is from one single region, like the US or the UK.
Give us some of those specific Britishisms that Satoshi used.
Oh, the list is surprisingly long and consistent. Satoshi used colloquialisms like bloody hard and chap, preferred maths over math, and used UK spellings like color, favor, and gray.
But in the same document.
In the same documents, he would use American technical phrasing like minimize, check, and specific Silicon Valley jargon related to software development. For a long time, researchers were just baffled, looking for a single person who moved between the Commonwealth and the U.S. at a really formative stage of their life.
But this transatlantic idiolect, as it's called, it fits Musk's personal trajectory like a glove. It is an almost perfect biographical correlation. Musk was born and raised in South Africa, a Commonwealth nation, which ingrained the British English dialect and spelling. He then moved to Canada, another Commonwealth country, before settling permanently in Silicon Valley.
So he created this hybrid style naturally.
Yes. It created a writer whose foundational language is British, but whose professional and technical vocabulary is undeniably American. The hybridity that mystified researchers looking for a single geographic origin is, for Musk, simply a linguistic accident of his own history.
That biographical fit is incredibly powerful. But we also have to highlight the specific cognitive signature, the order of magnitude phrase.
This is a remarkable detail. A cognitive signature is a recurring verbal tick that reflects an individual's thought process. And Satoshi uses the phrase order of magnitude repeatedly when explaining technical concepts.
For example,
discussing how the scalability of the blockchain needed to be improved by an order of magnitude, or analyzing the difficulty adjustment algorithm. It's used not just as a casual intensifier, but as a precise technical metric.
And as you mentioned earlier, this specific phrase is arguably Elon Musk's most overused idiom in his public life.
Without a doubt. We have records spanning 2 decades, from interviews about PayPal in the early 2000s to Tesla battery costs to optimizing the Raptor rocket engine at SpaceX. He uses order of magnitude constantly.
To describe any big improvement.
Any significant factor of 10 improvement or change. He'll say, we need to reduce the manufacturing time by an order of magnitude. Or the thrust-to-weight ratio is better by an order of magnitude. The statistical overlap of this specific, technically precise verbal leetic, combined with that unique Commonwealth American linguistic hybridity, forms the intellectual core of the believer's case.
And we even have those minor, almost archaeological details like typing habits that add to the cumulative weight of all this.
The double space after periods.
Right.
Satoshi consistently used double spaces in forum posts in his early emails. This habit is deeply ingrained in those who learned to type on manual typewriters or early word processors in the 1980s, where 2 spaces were standard practice.
And Musk learned to type in that era.
Given his age and history, he learned typing during this precise era. It's a minor detail in isolation, but it completes the forensic profile of a person born in a Commonwealth nation who learned to type in the '80s and developed a technical career in the U.S.
And finally, on this point, when Musk is cornered on the question of Satoshi's identity, he employs this fascinating deflection strategy.
He consistently points the finger, but never at himself. He frequently names Nick Szabo, the recognized intellectual forefather of BitGold, which is the precursor to Bitcoin.
And he's done this publicly.
Oh, yes. In 2021, Musk explicitly stated, "I really don't know who created Bitcoin, but Nick Szabo seems to be the person most responsible for the development of its concepts."
So is he genuinely confused, or is this strategic misdirection?
Theorists argue strongly that it's the latter. Independent linguistic studies have indeed flagged Szabo as a high probability match for Satoshi, based on his grammar, style, vocabulary. But Szabo vehemently denies any involvement.
So Musk points to the other likely suspect.
The argument is that by highlighting the acknowledged inventor of the concept, BitGold Musk, successfully distracts the public and the media from the actual architect of the final implementation Bitcoin. It's a classic rhetorical move. Point to the likely candidate who is already denying it, and keep your own identity concealed.
The linguistic evidence is certainly seductive, but now we have to confront the most rigorous counterargument, the one that usually sinks this whole theory, the cold, hard logistics of the 2008 timeline.
This is the definitive moment of crisis for the Musk is Satoshi theory. We have to objectively analyze what Elon Musk was actually doing in 2008, precisely when the Bitcoin white paper was being published and all that complex coding began. And that year was, by his own account, the darkest, most consuming period of his professional and personal life.
Okay, let's detail that timeline of despair, just to appreciate the cognitive weight he was under.
We start in August 2008. SpaceX had just suffered its third consecutive launch failure of the Falcon 1 rocket. The company was nearing functional bankruptcy. He had exhausted nearly all of his remaining PayPal fortune.
One more failure, and it was all over.
He was facing the existential reality that a fourth failure meant the end of his life's work in space.
Then, in October 2008, the Bitcoin white paper just appears on Halloween.
Of all days. And at that exact moment, Tesla was hemorrhaging cash, struggling to scale up the Roadster. The 2008 global financial crisis had frozen capital markets completely. Venture capitalists were fleeing high-risk tech assets. Musk was flying constantly, desperately trying to secure bridge loans just to keep the lights on.
At both companies?
At both companies. And by December 2008, the situation was truly critical.
How bad did it get?
December 2008 saw Musk at his absolute lowest. Tesla was literally days from missing payroll. The company's final solvency hinged on a last-minute investment infusion that closed on Christmas Eve.
Wow.
Musk was personally bankrupt, borrowing from friends. He famously described this period not just as stressful, but as waking up screaming from nightmares. He was fighting a two-front war for corporate survival.
So if we look at this from the skeptical view, the improbability calculation, it just seems unassailable. How could a man undergoing such intense financial and personal catastrophe, fighting for his corporate life, simultaneously have the immense cognitive bandwidth required to invent Bitcoin?
That cognitive load is the real sticking point.
Yeah.
I mean, we are talking about designing a solution for the double spending problem, integrating proof of work, writing a complex, robust C++ code base, and managing the slow, detailed communication required to introduce a radical new technology to the world.
All as a side project.
All as a moonlighting hobby, while his two flagship companies were literally on fire. Skeptics argue the simple reality of the calendar makes it logistically impossible.
But wait a minute, can we really just dismiss all that linguistic and architectural data based only on his calendar? I mean, isn't that precisely when radicalized, desperate genius thrives? The 2008 crisis wasn't just a distraction, it was a profound trauma for global finance.
And that is the compelling counter-narrative. The crisis as catalyst. Proponents argue that witnessing the collapse of trust in the banking system, the very failure that wiped out global capital, didn't distract Musk. It radicalized him.
So the desperation created focus.
It might have created the intense focus needed to engineer an immune system for finance, something built on mathematical certainty, not trust in centralized institutions that were failing before his very eyes.
And this leans heavily on his already legendary work ethic.
It does. I mean, Musk is known for his nearly superhuman working habits. The self-described nano manager, working 120-hour weeks, using polyphasic sleep patterns, famously sleeping on the factory floor. If any human could manage to code a monetary revolution in the gaps between corporate collapse, the argument is that it would be the same man who taught himself how to build orbital rockets.
And there's one final piece of circumstantial evidence tied to his shifting corporate priorities, the drop-off in Satoshi's activity.
The timing here is highly suspicious. Satoshi's coding and communication activity, the forum posts, the emails, it all dropped off significantly, almost completely ceasing in late 2010.
And that timing coincides with what?
It coincides exactly with the period when Tesla launched its successful IPO and SpaceX secured those crucial, high-pressure NASA commercial resupply services contracts.
Which would have demanded his total, undivided attention.
Precisely. If Musk was Satoshi, that drop-off makes perfect logistical sense. The financial creation could finally be set aside because the industrial creations demanded his full, singular focus. The timing provides a neat answer to the puzzle of why the founder of a $100 billion asset just vanished into thin air.
Okay, we've established the seductive evidence of the cipher versus the cold, hard logistics of 2008. Now, let's pivot entirely. We move from the historical mystery of Satoshi to the public, verifiable record of Musk's financial activity, where he shifts roles from potential creator to confirmed chaotic beneficiary. This is the Techno-King's treasury.
And this transition moves us into the realm of SEC-regulated finance and verifiable corporate maneuvers. It frames Musk as a sophisticated financial opportunist, acting within and often manipulating the very systems he claims to despise.
The entry point for this was February 2021, and it sent absolute shockwaves across the globe.
It was a defining moment for corporate treasury management. On February 8, 2021, Tesla disclosed in a 10-K filing that they had purchased a monumental $1.5 billion worth of Bitcoin.
$1.5 billion.
Which represented about 7.5% of their total cash reserves at the time. Never before had a major S&P 500 company allocated such a significant portion of its corporate treasury to a non-fiat volatile asset like this.
What was the immediate, tangible market impact of that single corporate announcement?
The market went parabolic. Bitcoin's price surged over 20% immediately following the announcement, which just demonstrated the unparalleled signaling power of the Musk and Tesla brand. Their estimated entry price was around $31,620 per coin. The very act of buying created an instant, massive paper profit for Tesla.
Essentially rewarding the company just for believing.
Exactly.
But the strategy wasn't OCHO-DL, hold on for dear life, for very long. Critics quickly pointed out the two key sales events, which they called the paper hand sales.
The first sale was very quick. In the first quarter of 2021, shortly after the purchase, Tesla sold about 10% of its holding. They realized a quick $101 million profit. Musk defended this by saying it was necessary to prove liquidity, to show that Bitcoin could be converted into US dollars at scale without crashing the market.
But profit-taking was clearly a factor.
Oh, absolutely. But then the second sale in the second quarter of 2022, that was a major reversal.
The capitulation.
That was a large-scale capitulation. Amidst the broader crypto winter and facing internal pressures like production delays and the expensive Shanghai factory shutdowns, Tesla sold a massive 75% of its remaining Bitcoin holding. This generated $936 million in cash. Their estimated average exit price for that specific sale was approximately $29,000 per coin.
Okay, we need to pause here and talk about accounting rules, because this is where Musk's timing, or maybe his foresight, becomes legally fascinating.
It's absolutely critical to understand this. Under the accounting rules at the time, this is pre-2024, Bitcoin was classified as an indefinite-lived intangible asset. And this classification created a very asymmetric ledger.
Asymmetric how?
If the price of Bitcoin went up, Tesla could only recognize the gain if they actually sold the asset. But crucially, if the price dipped below their cost basis, even if they never sold it, they were forced to record a non-cash impairment charge.
So they could record losses on paper instantly, but could only record gains upon a sale. That seems skewed.
It's very skewed. And that forced impairment charge negatively impacted their reported earnings and made their balance sheet look much worse during crypto downturns. This is why they were so incentivized to sell large portions of their holding during volatile periods to stop the bleeding on paper.
But this is where the story dramatically validates his long-term hold on the remaining 25% for his staunch supporters, thanks to a regulatory shift in 2024 and 2025.
Yes. The accounting rule change from the Financial Accounting Standards Board, FASB ASU 2023-08, was a game changer. Before late 2024, companies had to use that restrictive lower of cost or market rule. The new rule allows companies to report crypto assets at fair value, meaning the current market price.
How did that specifically benefit Tesla in their reporting?
Well, as crypto prices rebounded strongly in 2024 and 2025, Tesla was suddenly able to record a massive, estimated $600 million non-cash benefit in their reports. And this was purely driven by the paper gains on that remaining 25% holding that they had retained through the whole downturn.
And this maneuver bolstered their earnings per share, their EPS. So supporters would argue this vindicated his volatile long-term strategy.
They did. They argue it was strategic patience. However, critics correctly point out that this is still a distortion. It allows a $600 million benefit driven by an external volatile asset to inflate the financial appearance of the core automotive business. It makes the company look significantly more profitable than its car manufacturing operations alone would suggest.
Beyond the accounting, the most significant allegation of market manipulation centers on the ESG pivot that occurred in May 2021.
Ah, yes, the alleged pump, profit, dump cycle in its purest form. They pumped with the purchase, took some initial profit, and then on May 12, 2021, Musk tweeted that Tesla was suspending vehicle purchases using Bitcoin due to the rapidly increasing use of fossil fuels for Bitcoin mining.
But the critical analysis here, as you mentioned, is that the energy mix of Bitcoin mining hadn't fundamentally changed between February and May of that year.
That is the crucial observation. Critics argue the ESG narrative was a calculated, ethically palatable pretext. The real logistical issue was the accounting and operational nightmare created by accepting Bitcoin for car payments.
What do you mean?
Just imagine a customer buying a car for, say, 1.5 BTC and then needing a refund 3 months later when the value of that 1.5 BTC has dropped by 40% or surged by 60%. Managing that fluctuating asset price for customer refunds was an operational, compliance, and accounting nightmare.
So the energy concern provided a strong, non-financial narrative to exit a crippling logistical commitment.
Precisely. It was a very clean way out. And the market impact of that single tweet demonstrated what critics often call his God complex. The announcement caused an immediate and substantial 30 to 50% correction in Bitcoin's price over the following weeks. It just demonstrated his ability to unilaterally affect a multi-trillion-dollar asset class with a single social media post.
All right, now we shift focus entirely to Dogecoin. This is the currency that fully embodies the trickster archetype and the massive retail phenomenon. This wasn't a treasury play, this was a personal crusade.
Dogecoin was his laboratory for mass behavioral psychology. He began campaigning for the joke currency around 2019 and 2020, eventually adopting the self-proclaimed title of the Doge Father. It was a relentless, charismatic campaign based entirely on memes, like the famous Lion King image, where he's holding a Doge Simba up to the world.
And researchers have actually been able to quantify the cause and effect of these posts, haven't they?
Yes, and they coined the term algorithmic charisma. Studies showed that abnormal rush orders and market movement began within 13 minutes of his key tweets. This is compelling evidence that algorithmic bots were specifically programmed to scrape his feed, identify keywords, and execute immediate buys. This turns his social media activity into a direct, centralized market trigger.
For an asset that's supposed to be decentralized.
The
ultimate, most brazen expression of this influence came in April 2023.
The Twitter logo swap. For a time, he replaced the blue Twitter bird with the Dogecoin Shiba Inu. The price surged 30% almost instantly. It was a direct, visual, nonverbal manipulation of market sentiment.
And this specific move became a key piece of evidence in the massive lawsuit that followed.
It did. The $258 billion Johnson v. Musk class action lawsuit specifically alleges that during this hype-driven spike, the logo swap Musk sold an estimated $124 million worth of Dogecoin. The plaintiffs argued this was a perfectly coordinated pump-and-dump scheme. Manufacture enthusiasm, pump the price, and then sell into the resulting retail liquidity.
But the single most infamous event, the one everyone remembers, was the Saturday Night Live appearance in May of 2021. This was a minute-by-minute autopsy of a manufactured liquidity event.
It was performance art meeting high finance. In the weeks leading up to May 8, 2021, Dogecoin rallied from pennies to an all-time high of $0.73. And this was fueled entirely by retail speculation that Musk would make some massive positive announcement.
Like Dogecoin to the moon.
Exactly. A major corporate integration or even a literal Dogecoin to the moon mission. Everyone was watching, expecting the price to surge even higher, but the crash happened during the show.
That's the critical detail the forensic data confirms. The key moment occurred during the Weekend Update segment, where Musk was playing a financial expert named Lloyd Ostertag, attempting to explain Dogecoin to the hosts. And we have the exact transcript of the exchange that acted as the pin that popped the bubble.
We do. Michael Che, feigning confusion, asks Musk's character, "So it's a hustle?" And Musk, in character, replies with a simple confirmed, "Yeah, it's a hustle." And even though he immediately followed it with the rallying cry, "To the moon," the damage was done.
And the data confirms the reaction was immediate.
The sharp drop began almost precisely at 11:45 p.m. Eastern Time, coinciding with that hustle segment. The price had peaked just pre-show at around 73 cents. Within 24 hours, it had fallen to about 46 cents, a devastating 35% drop. The chaos was so intense that Robinhood's crypto trading systems actually crashed shortly after midnight due to the sheer volume of frantic sell orders.
So the forensic conclusion is clear. The S&L event was a classic, perfectly timed liquidity event.
It was textbook. Whales, the large initial holders, used the predictable massive influx of retail viewers, the so-called dumb money, to offload their positions near the peak. That hustle line, a line from a script he would have approved, acted as a definitive signal to sell. The Dogecoin bubble was popped in real time on national television, leading to a subsequent 90% crash over the next year.
And this brings us to the legal warfare that followed. The Johnson v. Musk $258 billion class action racketeering lawsuit.
The plaintiffs cited the entire pattern, the incessant tweets, the S&L performance, the logo swaps. All of it was cited as evidence of a coordinated criminal pump-and-dump scheme designed to transfer wealth from the masses to Musk-controlled entities.
But Musk's legal defense relied on a fascinating, almost philosophical concept, the defense of puffery.
His legal team argued that his claims were fundamentally exaggerated rhetoric hyperbole about a meme coin that no reasonable person should interpret literally as actionable financial advice. They maintained that tweeting things like Dogecoin rolls are just statements of aspirational enthusiasm, too vague to constitute securities fraud under established legal precedents.
And in August 2024, U.S. District Judge Alvin Hellerstein dismissed the suit.
He did. He ruled that aspirational and puffery statements about a meme coin could not form the basis of a securities fraud claim. The court essentially confirmed that the statements were too hyperbolic, too clearly promotional to mislead a prudent investor.
What's truly fascinating here is the paradox created by that specific ruling, the trickster defense.
The ruling essentially legally codified the trickster defense as a shield against financial liability. Musk won immunity precisely because the court accepted that he was essentially acting like a clown.
Which is an incredible paradox.
The central paradox is that the world's richest man, whose statements move global markets and affect millions of retail investors, is legally immune from financial liability because the court deems that no reasonable investor should take his financial pronouncements seriously.
So if the legal system labels him a jester, what does that say about the psychological and symbolic role he's playing? Let's look at this through a Jungian lens, contrasting the two figures we've examined.
The contrast is stark. Satoshi Nakamoto represents the creator, or the sage. The figure who seeks to build a system of perfect order, a decentralized, flawless monetary machine, and then performs the ultimate act of humility by disappearing, to allow the system to function autonomously, free of a centralized personality.
And Musk is the opposite. Musk, on the other hand, is the quintessential trickster.
The trickster breaks the rules, mocks the established system, and revels in chaos.
That's his core function. He mocks the SEC, he pushes market boundaries, and he uses manufactured chaos, like the S&L incident, to expose the hypocrisy or the fragility of the established system. The trickster's power is derived from his unpredictability. He doesn't build the temple, he plays pranks in the sanctuary. And his ability to maintain this high-wire act depends entirely on that algorithmic charisma. He knows volatility creates engagement, and engagement maintains his aura as the techno king.
And crucially, keeps the price of the meme coin elevated.
That's right.
Now we have to look forward. Beyond the lawsuits and the memes, there's a serious financial pivot happening right now. The 2025 horizon and the shift toward regulated financial plumbing for the Everything app. Yes. While the Dogecoin memes persist, Musk's underlying strategic ambition for X is shifting profoundly toward integrating regulated, stable financial assets. This is about building the lucrative infrastructure for global transactions, and this is where the Genius Act becomes critically important.
We need a detailed look at this Genius Act, the Guiding and Establishing National Innovation for U.S. Stablecoins Act, which was signed in July 2025.
This legislation is a watershed moment for high-tech finance. Historically, financial services companies that wanted to handle money transfers across the U.S. had to get money transmitter licenses in 50 separate states and territories. This was an extremely fragmented, costly, and bureaucratic process.
And this state-by-state patchwork was a massive barrier to entry for a national platform like X.
Absolutely. The compliance cost was astronomical, and the regulatory uncertainty was crippling. The 𝐏𝐻𝐃𝐂𝐀𝐒𝐓 Act changes that entirely by providing a federal charter for non-bank stablecoin issuers. This federal charter effectively acts as a single entry key, allowing large tech companies like X to bypass that fragmented, expensive state-by-state system.
So this sounds tailor-made for realizing Musk's everything app vision in the U.S.
It is the single most important regulatory development that enables it. Musk wants X to mirror China's immensely successful WeChat model, where payments, banking, social interaction, it's all seamlessly integrated. The 𝐏𝐻𝐃 Act allows X to potentially issue its own USD-backed stablecoin, or just integrate existing regulated ones, and effectively capture lucrative global transaction fees. It's a much more stable, predictable, and profitable business model than meme coin pumping.
But even with this federal green light, the trickster persona continues to create friction in the regulated world.
Yes, despite the 𝐏𝐻𝐃 Act easing the path, X Payments LLC still needed to secure state-level money transmitter licenses, especially in places that retain strict oversight. By late 2025, X Payments had successfully secured licenses in over 40 states. But New York remained a crucial holdout.
Why New York?
State senators there explicitly cited Musk's erratic behavior and his history of market manipulation as reasons to urge the Department of Financial Services to deny X a crucial BIT license.
So, the chaos that fuels the meme coin speculation actively undermines his serious, highly regulated financial ambitions.
That is the core tension. The trickster persona that pumps Dogecoin is the same factor that makes regulated finance hesitant to grant him a license to run a global payment system.
And finally, we have this surreal, recursive loop of Musk attempting to keep the Dogecoin meme alive in the political sphere, even as he pivots to regulated stablecoins.
It's a calculated strategy to maintain visibility. In 2024 and 2025, Musk publicly adopted the acronym DOGE for a proposed Department of Government Efficiency in the political sphere. This is a subtle, non-financial method to keep the Dogecoin meme visible and relevant in the national discourse, maintaining its speculative premium through political and cultural proximity without ever providing explicit financial endorsement that could invite further SEC scrutiny.
This has been an incredibly complex, exhaustive investigation, moving from cryptic code to corporate treasuries and then deep into the mechanics of meme culture. Let's synthesize the forensic evidence to give the listener the definitive answers we sought at the outset.
Based on the detailed evidence we've looked at, I think we can offer some clear conclusions. First, is Elon Musk's Satoshi Nakamoto? No. While the linguistic and architectural coincidences, the hybrid dialect, the order of magnitude signature, the monolithic C++ code are highly seductive, the logistical impossibility of the 2008 crisis just outweighs those factors. He is not the architect of the blockchain.
But he is.
He is, however, its most aggressive and successful colonizer.
And second, is he a scammer?
Legally, no. The dismissal of the Johnson v. Musk lawsuit and the successful deployment of that puffery defense ensure his legal immunity. Functionally, yes. The forensic analysis confirms he acts as a highly effective market manipulator. He utilizes asymmetric information and his unparalleled influence, what we've been calling algorithmic charisma, to generate predictable surges, effectively extracting liquidity from retail investors to subsidize his corporate and personal ambitions.
So if we step back, what does this entire saga mean for the financial world and for you, the listener, trying to navigate these markets?
Elon Musk is a sovereign actor. He has realized a fundamental truth about the digital age. In this world, the line between a meme, a security, and a currency is defined solely by collective manufactured belief. And by hacking this belief system by being unpredictable, theatrical, and omnipresent, he has become the most powerful centralized force operating within a system designed specifically to resist centralization. He is a chaotic liquidity engine that Satoshi Nakamoto's perfectly crafted code can verify, but ultimately cannot control.
That forensic conclusion is unsettling, but it's entirely supported by the data we've covered. We've established the strength of the stylistic hybridity, the overwhelming impossibility of the 2008 timeline, the savvy way he benefited from the FASB accounting rule changes, and the legal protection his trickster persona affords him. But the source material leaves us with one final, deeply provocative thought that builds on that 2025 pivot. We noted that the future of X payments relies on the lucrative, regulated stablecoin model ushered in by the 𝐏𝐻𝐃𝐂𝐀𝐒𝐓 Act. This means X needs financial stability and predictable transaction fees. If Musk pivots entirely toward this regulated, stable, and highly profitable model, what happens to the market capitalization of the original meme coin, Dogecoin, which exists solely because of the trickster's chaotic, unpredictable, and frankly dangerous presence? What stands out to you about the power of the narrative versus the power of the code? You really have to consider the implications of trying to regulate charisma in the financial world.